What I kept coming back to was this one question. There is a system being developed right now that would let governments attach expiration dates and spending rules directly to your money. Not your credit, your actual money. That's not a theory. That's in the Bank for International Settlements 2023 Annual Economic Report, Chapter 3, Public Document. Before we go further, let's trace how we actually got here, because this didn't start with Bitcoin or stimulus checks. It started with a private meeting on an island off Georgia in 1910, and the documentation is public. Let's define what we're actually talking about. A central bank digital currency, CBDC, is money issued directly by the central bank. The Federal Reserve's own January 2022 discussion paper, Money and Payments, the US dollar in the digital age, calls it a digital liability of the Federal Reserve. Here's the key distinction. In your current bank account, you own the deposit. The bank is the custodian. With the CBDC, that separation completely disappears. You hold a direct claim against the central bank, and that claim can come with built-in rules. Think of it like a gift card. The issuer can make it expire, restrict where it can be sent, see every transaction in real time. The European Data Protection Supervisor put it plainly in their March 2023 paper on CBDC programmability. The combination of the ability to program digital money to have restrictions, together with the ability of a future government to control and surveil financial transactions, creates a level of potential intrusion into private life that has never before existed in financial systems. You weren't wrong to feel uneasy about where this leads. Here's the documented architecture. Every document I'm referencing, the full thread, unredacted where available, is indexed in the archive on Patreon. That's linked below. Let's go back further. Not 2022, not 2008. 4 documented moments that show the pattern. 1907, the banking panic hits. JP Morgan personally steps in to stabilize the system. The Richmond Fed has documented how one private banker essentially acted as lender of last resort. Congress's response wasn't to limit that concentrated power, it was to institutionalize it. 1910, November, 6 men. Nelson Aldrich, A. Piot Andrew, Henry Davison, Arthur Shelton, Frank Vanderlip, and Paul Warburg meet privately at Jekyll Island, Georgia. They draft what becomes the foundation for the Federal Reserve. The Fed's own historians confirm the meeting was kept secret at the time. In fact, it was known as the Duck Hunt. Warburg, who had deep familiarity with the European central banking models, was a key technical voice. 1913, the Federal Reserve Act passes on December 23rd, a hybrid system, private member banks with a public mandate. 1933, Executive Order 6102 requires citizens to turn in gold. The government buys it at one price, then revalues its own holdings higher, an early form of conditional control. Then 1971, Nixon ends dollar-gold convertibility. And 2022, Executive Order 14067 directs agencies to explore a US CBDC. Each crisis justified the next layer. That's not a conspiracy. That's the documented institutional progression. Let's be precise about Jekyll Island. The official story, smart men solving banking panics, part of that's true. The system was fragile, but the documents show who was in the room. Representatives of major Wall Street interests, JP Morgan, National City Bank, Kuhn Loeb, probably butchered that, and through Aldrich, Rockefeller ties. Their Aldrich plan became the blueprint. The 1913 Act was a modified version. As Carol Quigley described these networks, You don't always need secrecy when the truth sounds implausible. The gap between what happened and what most people believe becomes its own protection. Here's the parable that fits. A company builds the entire town, roads, stores, houses, and the only bank. They set the rules and hold influence in it. The town stands. The question is, who really holds the deed to the system? The Fed was designed, in part, to move the kind of power J.P. Morgan exercised in 1907 into an institutional framework. That's on their own history site. Now the receipts. One Bank for International Settlements 2023 Annual Economic Report, Chapter 3, they discuss a programmable platform hosting tokenized bonds, deposits, and central bank money on a single unified ledger. 2. European Data Protection Supervisor, March 2023, programmable money consists of CBDC with built-in rules imposing restrictions. And they warn of a level of potential intrusion that has never before existed. And 3, China's e-CNY pilots include expiration and category restrictions, documented in peer-reviewed analysis and security studies. The architecture exists. The question is how it's deployed. As of 2024, 134 countries, 98% of global GDP, are exploring CBDCs according to the Atlantic Council Tracker. Recent U.S. policy under Trump revoked the prior executive order and signaled opposition to a retail digital dollar. That matters, but the BIS, Unified Ledger Project, and international infrastructure continue. The Federal Reserve remains a BIS member. Your sense that something has been quietly shaping the options available to you, that's not paranoia, and it's not just in one of my other videos. It's visible on multiple org charts. Let me steelman the other side. Proponents say that CBDCs are faster, cheaper, reach the unbanked, and fight crime. Those goals aren't crazy. The problem is the extra architecture, expiration dates, spending restrictions, unified surveillance ledger isn't required for inclusion or efficiency. Existing digital payments can handle most benefits without direct central bank programmability. When a system adds controls not necessary for its stated purpose, we should ask who those controls ultimately serve. The documents give us the answer. So what do you actually do with all of this? 3 concrete steps. 1, distinguish retail CBDC from the wholesale international layer. Policy can pause one while the infrastructure advances. 2, follow the institutional progression, not just the headlines. The Federal Reserve Act, BIS membership, those structural pieces remain. 3, primary source everything. Go deeper than just this video I'm sharing with you right now. And all the documents that I've cited here are in the description, and the expanse of the paper trail is either going to be added to by other commenters and included over on my Patreon for every single investigation that we're doing on this channel. If something doesn't match what you find, tell me in the comments. That's how we do this together. The moment you see the engine, you're no longer just inside of the car. We've traced it, named it, sourced it. So if that's the kind of investigation that you want to be part of before a video comes out, not just watching it, but actually inside of it, the archive over on Patreon is where that happens. And for those who want to go even deeper, the analysts are welcome to do research sessions together. I'm going to follow up this video with another one specifically on digital control and data centers that looks at the physical surveillance layer and ties it all together. Drop a comment with what clicked for you in this video. And check this one out if you want to know a little bit more about the fall of empires.